Welcome to Pips to Profit. My name is Cameron. I do have a big announcement. If this video can get 500 likes, I will select 3 of you for a 4-week private mentorship. And it includes daily personal assistance with potential trade setups, daily video calls for trade review, and a final review at the end of the month to see your trading progress. All you have to do is like the video, comment anything you'd like to down below, and of course, be subscribed to the channel. Starting off with GBP JPY, and just let's throw up on the screen exactly what we know so far about this week. We have our opening range high, that's the high of Monday. We have our initial balance high, that is the high of Tuesday. And we know that in this range we have about 260 pips of rise. 225 pips is 3 levels of 75. That gives us our check in the box for 3 levels of rise for the week. That being said, we have a market now that has gone up and made a high. We have a higher low, we have a higher high, and then at what point does the market make a lower low? It comes down and makes a lower low down here. So this market could be a broken down market. Additionally, we have underneath this low over here is a lot of space. These things are certain. These are things that we know for sure. There's no hindsight in that. We also know that we have the opening price there. We also know that we have the closing price right there. We know that this is considered a first red day based off of a pumping day. On the following day, we have a close below the open. And I know that on first red days, I look to take trades from the high of the session or from the high of the day. So coming to this day, we have our high of the day right here. When I come to the screen for the New York session, we also have the market having made a lower low in the London session. And I want to point out how did they do that. Come out of the low of the day, 1, 2, 3 to the low, and a reversal back to the high of the day. Now, this is the formula. Lower low, look for 3 levels of rise to the high of the day for the pump and dump trade setup. Measuring from low of the day up, we have 75 pips of rise. Again, check in the box. We have our 3 levels of rise. Now, we need to be in our session, and the times need to make sense. I want to point out real quick, 1 push consolidation, 2 push consolidation, 3rd push, 3 burst stair step back to the high of the day. That is the kind of price action that you want to see. That being said, my entry criteria, what do I need to see? 1, I need a high formed. We have our high of the day made back in the London session. I need to see a return to that high in some type of 3 push variation. I already went over that. We have 1, 2, and 3 pushes. Then I need the times to make sense. I need a chart pattern. I need an engulfment, and additionally a pin hammer of some kind, and time engulfments and those things. So let's look at the time of all of these things taking place. This is a 7 o'clock high. This is an hourly high, meaning that when price opened up at 8 o'clock down here and they ran this high, they have now maybe just taken liquidity. This is a run on liquidity, and the market could break down. I need it to prove that to me. Let's see, where is 8 o'clock's high? I want to make sure that they're not going to do some kind of measured move and go through the high of the day and keep going. This is the high of 8 o'clock. We have a run on the 8 o'clock high before they pull back inside and break down. We have higher low, higher high, lower low, lower high. Let's look at the time of all this. Where is 9 o'clock's open? Right there. So let's think about this in checklist form. We've got our high 3 pushes back into the high. We now have, this could be considered a M with a lower low, lower high. This could be considered a complex head and shoulders with the right shoulder. Triple top, however you want to see this. This is a chart pattern. We also have on the right shoulder of this M, we have another micro M that engulfs the 9 o'clock time. We get the lower low, so now I have my break in structure. We also have 1, 2, 3 back up into the 930 after the market is broken down, and an engulfment. So at this point right here, it's safe for you. I'm going to say safe. This has fulfilled all entry criteria aspects of my strategy. That would have been ideal first entry. My entries, I took 3 entries on the first 3 candles of the breakout right there. And of course, you can see that it was zero stress. The market fell away very quickly, and I very quickly was able to get to break even. And then just real quick, just in case you missed it in the beginning of the video, 500 likes on this video, I will be selecting 3 students for a 4-week free mentorship program. All you have to do is like the video, comment anything down below, and be subscribed to the channel to be selected. Let's get into the rest of this video. The next setup I want to point out is the oil trade and how it was set up. We have our Monday high, Tuesday low. So we know that for sure. We have our initial balance low. The other things that we know for sure, we know that we have a day where we have previous day's low hit right there. An inside day that does not hit either previous day's high or previous day's low. On the following day, we have previous day's low hit for a second time. And we have it hit for a third time right here. We have 3 days of previous day's low in the market. We can draw our trend line, something like this. And when we come to the screen, we see that the market has dumped aggressively on this Wednesday. A rectangle down at the lows. Now this could have kept going. It could have came back up and done some kind of 3 peaks and continued to go lower, but it doesn't. We get a large W at the low of the week after 3 days of previous day's low being hit, and that is a trade setup. We have not broken through the trend line yet, but we do have a break and a pullback. The market continues to move up. Coming into the New York session now, before the session has even started, we have now broken through the trend line, which is part of my criteria for entering these trades. I either want to be so far from the trend line that a mean reversion style of trade would be acceptable, or I want to be outside of the trend line so that I can look for the short squeeze. I was not personally watching oil, although I know other people were. 7:45, 8. We have a W now at the high of the day. And the time of all this, 8:15, 8:30, 8:45 is the engulfment. We have a pen hammer, 9 o'clock. 9:15, you get your engulfment up into right to that initial balance low. And then the last setup that I want to point out that may appear more choppy on the chart, but it's really about what has happened before this setup occurred. It's about the timing of everything, and we have our 3 days of previous day's low. This is the Euro British pound. We have 1 day, 2 days, and 3 days on Wednesday. Then we have a peak high, a peak low, and the market has now gone sideways. Big dump day on Tuesday, first green day on Wednesday. Now we have our day zero style scenario, peak high, peak low, sideways market. They've gone up and hit the highs a few times, but look at the time of all this, right? They come out of a consolidation. 1, 2, 3, stop hunt to the low of the day. Low of the day, right there. This high was, or this low was made in the Europe session. Stop hunt down to the low of the day. 1, 2, 3. And then an engulfment, a pen hammer, and a continuation back up. Day zero, First green day, we're only looking for buy low at the low of the day scenarios. Let's go down to the 1 minute chart. So you have the 1, 2, 3 down to the low of the day. You have a micro W after 9:30 now. Let's look at where 9:30 is. Low, high, higher low, higher high, break in structure, micro W at the low of the day. Break in structure on the micro W, the larger W, sorry. And then, so if you wanted to, if you saw this and you recognize the pattern, of course you could have got in down here at the lows. If you wanted to play it a little bit more safe, you could wait for things like this to happen. Let's see if there's any other time that has become relevant. The 10 o'clock open. They flipped the book right here on the 10 o'clock. They traded down and then engulfed it, went straight back up. They've traded back down into that 10 o'clock time, engulfed the 9:45. If you were not in down here, this is a really good place. And then if you want to add into your position here, with the idea being they've now engulfed 9:45, they've already worked the new hours open, they should not come back down into this area. And if they do, you're wrong. They rip it all the way back up, and they have hit the high of the day now, and they are continuing. I really hope that everybody got something out of this video and just have the idea of, 1, 2, 3 stop hunts to the low or high of the day, the M's, the W's, the measurements from high to low, using initial balance to form a thesis, to form an idea, and then knowing what day you are in the 3-day cycle, all of it coming together to build one great trading setup for the day.